MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. Hong Kong stocks lead Asia higher as authorities take steps to slow the yuan's descent and predict faster growth. US Treasury Secretary Janet Yellen will visit China early next month for economic talks. Russian betrayal. President Vladimir Putin denounces leaders of the Wagner Group as traitors in his first public comments since the aborted mutiny. Plus, monetary policy is in focus as ECB President Christine Lagarde delivers the opening speech at the Central Bank's Forum in Sintra in Portugal. We will be speaking live to the Bank of Latvia Governor Martins Kazaks. That conversation coming up very shortly. Tom, a focus then on the macro, a focus on what we're going to get out of Sintra. But it's really the China story that's driving stocks today.
Yeah, and as a result, you're seeing the risk sentiment has changed. You're seeing some upside coming through for European equities. Paired some of the earlier gains, the earlier strength, but it's still there, gaining about 0.3% across the main index is what you're seeing across the benchmark. Gains of 0.2%. Again, pairing some of the earlier highs, but China is certainly a factor. There's a couple of things that are coming through on that story. Li Keqiang, or Li Qiang, I should say, he's taken over from Li Keqiang, suggesting that there's going to be more support for the domestic economy. You've got a stronger yuan, and then you've got the news that Janet Yellen is going to be heading to China for meetings as well. But how long is that optimism going to last? Some of it has faded, at least around the edges. We look to the central banks, of course. We look to that data as around inflation coming out of Europe later this week. And, of course, today, that speech from President Lagarde. So gains, again, 0.2% across the benchmark. The DAX is up 0.3%. The FTSE 100 gain 20 points. Across your sectors, it's consumer, at least the last time I checked, that actually led the gains with the Kering story at play there, making an acquisition. And Kering is one of the leading stocks this morning. But, of course, basic resources, getting that impulse certainly from higher iron ore, higher copper as well, tying to the China story. There's a consumer sector gaining 0.7%. And we know as well that basic resources also seeing that upside. On the downside, you're seeing losses for energy, 0.2%, but also autos off about 0.1%. Banks gaining 0.6%. So it's banks, really, retail, consumer and basic resources
in their respective economies. This comes after a pause from the Fed and a 50 basis point hike from the Bank of England, which was not anticipated. Bloomberg's Francine Lacroix joins us now from Sintra with more. Francine, on the ECB, good morning.
Yeah, good morning, and I'm delighted to be joined by Martin Kazaks. He's the governor of the Bank of Latvia. Governor, thank you for joining us. A lot of debate, and this is the debate that every central bank faces, is do you fight inflation aggressively or do you wait for the lag in monetary policy to come through? Do you see stagflation taking hold in Europe?
I hope not. Okay, of course, we see that the economy is on the soft side, but we will do what is necessary for inflation to come down to our target of 2%. So stagflation is not a good choice to have.
So how many more hikes are you expecting from the ECB?
I think it's very premature to say exactly how much. It's data dependent, but I think at least on my part, I would not be comfortable in July to say, given the information I have currently on the economy, that we're done. I think we would need to raise rates further. We see that, yes, with somewhat softer economy, but the economy is not weak enough to deal with inflation by itself. So labor market's still quite strong. So I would say that further hikes still necessary. But
in September?
We'll see in September. September will be decided in September, October in October. We move on, new data comes in, we decide about it. And I think very critical element here, of course, is also the fiscal part of the equation. If fiscal policy will not become tighter, then monetary policy will need to counteract it.
Governor, when you look at the markets, what do you think they're getting wrong right now?
I think they're expecting, and they're too optimistic, that inflation will come down much sooner than perhaps we would expect. And I think it's wrong to expect that rates will be cut already in the first half of next year. In my view, I would say that we would need to cut rates only when we see that inflation significantly and persistently starts to undershoot our 2% target. Only then I would say that the rate cuts would be necessary. Otherwise, if inflation converges to 2%, why should we stimulate the economy by cutting the rates? And the higher rates would also allow us to preserve the monetary policy space for further shocks.
So Governor, in terms of timeline, you actually don't see ECB cutting rates before at least the second half of next year?
By no means in the first half, because it's simply inconsistent, in my view, with the baseline scenario that we have. Either the markets are more optimistic on inflation, or they are pricing in different macroeconomic scenarios with, I don't know, financial turmoil or the economy in a deeper recession.
Under what circumstances would you actually envision or want, interest rate increases to pause? So not stop, but at least pause.
Of course, it will depend on all those three elements that we very clearly highlighted. What happens with inflation, with underlying inflation, and with the transmission of monetary policy. But one important thing for the markets to take into account is that pausing does not mean stopping. We can add on to the interest rates whenever it's necessary. And currently, my view is that the risks of doing too little are still much higher than the risks of doing too much. If we have raised the rates to somewhat higher than necessary levels, we can very quickly revert that. But if the rates remain at too low a level, inflation will root in. And it can also rebound, so we would need to come back with much stronger rate increases, which would be more painful for the economy. So it's better to keep increasing the rates cautiously, gradually, if necessary, take a pause. But in my view, in July, we will not be able to say, that's it, we're done.
But Governor, you seem to suggest that there's a bias in the market, that they're expecting central banks, and especially the ECB, to do less than you will actually do. Is this because they worry more about the economy than inflation and think central bank will focus on that?
I think that the markets perhaps expect that inflation simply will come down much quicker. I would be worried about it because what we see that the key drivers for inflation are becoming to be the ones that are local, domestic factors. We see labor markets still quite strong, wage pressures are resilient. We will see in the second half of this year that wage growth on average is higher than inflation, which means, again, adding to the purchasing power of households. I think inflation persistence is much stronger, and the risks for inflation are on the upside.
So do you worry actually about a spiral, wage, price, profit?
It's not there yet, but that would be a nightmare scenario for me to see that wage pressures start translating into the price pressures and so on. So we should not allow for that.
Because if that happens, what, the central bank loses control?
No, it simply becomes much more difficult. You need to raise the rates much higher, which means that you need to depress demand much more.
Governor, there's also TLTROs and a huge amount that actually banks have to pay back. How worried are you about some of the smaller Italian and Greek banks?
Of course, one has to remain vigilant and very cautious in terms of how do the financial markets absorb these changes in the balance sheet. But so far, so good.
But it's not. But the ultimatum is coming now. So it could we see a bumpy summer?
We will monitor that,
Yeah.
and we have instruments to take care of these things. Okay.
Governor, I know this is a delicate question because we don't 100% know what kind of situation we have in Russia, but if there was to be instability in the Russian economy like we feared over the weekend, what impact does that have on the economy, energy prices, and therefore monetary policy?
I think there are many scenarios out there, and I think what the last weekend very clearly shows is that the regime in Russia provides lots of risks. There's high uncertainty and at times even chaos. So I would say perhaps two messages. One, remain very cautious, see what you can do on your own as part of the best Western countries. I think we need to support Ukraine.
Yeah.
We need to do our homework. We have to be resilient and hold together. As for the companies still active in Russia, I would say that they still not appreciate all the political risks that they have faced and will face. So staying in Russia is an extremely high-risk business. So they could do better with doing their business elsewhere.
Do you worry about price stability?
It could have impact, for instance, as you mentioned, on the both energy prices, also perhaps food prices. But there are so many scenarios currently that it is very difficult to speculate on the actual impact of the economic outlook. So be vigilant, be cautious, do your homework.
Governor, thank you so much with those wise words at the end. That was Governor Kazak's with that, and I'm going to send it back to you in London. And of course, we'll have plenty more from Sintra throughout the day.
Fran, thanks so much. Bloomberg's Francine Lacroix in Sintra with that ECB conversation, important conversation, and not wanting to be pinned down on, well, not even July, let alone September. Let me tell you that we bring you plenty of coverage of the Sintra events. The ECB President, Christine Lagarde, will be giving her welcome speech. That's at 9 a.m. UK time, right here on Bloomberg TV. You can follow that. And, of course, we'll have it across the Bloomberg terminal for you as well.
And here's a really interesting corporate story coming up. Why shares jumping? By the way, just over 20%. In early trading here in London after the money transfer firm reports an earnings beat. We're going to speak to the CEO about those numbers and the decision to list in London. That is next. This is Bloomberg.
Somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
DOJ or other authorities
Could face bigger challenges.
Listens next.
Fed was going to keep rates.
World Cup. This is a three.
As the economic picture does.
To be okay is getting ready to make a decision.
This is Markets Today. We're 43 minutes into the European equity trading session, and you can see European equity markets, well, modest gains. They were up more strongly than this, thanks to positive vibes coming through from Chinese authorities talking about better growth in the second half of the year, changing the FX exchange rate around the yuan, trying to reduce some of that weakness. That's been all something that those things have been supporting the Asia trading day, but actually just falling off a little bit as we go through the European trading day. Now, let's get to a stock that is doing very well today, though. Wise shares have surged in early trading after boosting the company's 2024 outlook. The money transfer firm is the biggest gaining stock on Europe Stock 600 today, with Wise shares turning positive year to date. The stock up by 17.7%, just up by 20% a moment ago. Let's talk to the Wise CEO, Christo Carmen, who joins us right now here on set in London. Christo, very nice to have you with us. Thanks for coming to join us. So a bit of an upgrade to your outlook for 2024, and that seems to have done the trick. It's certainly positive. And a number of analysts reacting very positively. The share price goes higher. So far, so good. One analyst who actually is a bit less positive says, yes, this looks great at first blush, but there's a risk from slowing average volume and a potential squeeze on gross and net interest income. Does he have a point? Are you concerned that things get a little tougher from here?
So from our perspective, we're just starting our journey. We're really only scratching the surface. We have about 5% market share across people moving money internationally, about less than 1% of small businesses. So at this point, we're just really getting started with everything. And what we're seeing is all of our results are driven by customer growth. So our customers talking to their friends, their families, bringing on more people to Wise. So we're now, the last financial year, we had 10 million people use Wise across the world. So that's the thing that really drives our results in the medium term.
Just to push you on the volumes question.
Please.
Because there is a bit of concern that volumes are not looking as healthy as maybe they could have. Do you expect volumes, are you seeing those picking up in the second half? Your customer base has increased, but volumes are looking for some, at least a little tepid. What we see is there are like volumes of how much people and businesses move internationally. Yeah. This is not for us to do anything about. So that's going to be slightly volatile with the economic cycle, maybe with other things happening in the world. We expect this to kind of move up and down and stabilize. And over the long term, it doesn't really make a big difference as the base is growing so fast.
Okay.
And we're taking market share.
Yeah, we're just really trying to find the weak spots, but the stock's up 18%. So, you know, we'll certainly give you that. In terms of that volume story, though, and you say it's for others to control, but it does have an impact on your bottom line. So, I mean, are you seeing that, you know, migration trends, does that have an impact on the amount of money that, or the need that people have to transfer cross-border? Cost of living crises in various parts of the developed markets. Are these factors that weigh on the willingness of people to transfer?
Well, people are transferring, but they're now using Wise more as their international banking service. So one is people, expats moving between countries, but then also small businesses. When you're a Swedish furniture maker and you're invoicing all around the world, getting an international banking service which gives you local accounts around the world, you can invoice in local currencies, that's a really big deal. So there's now an increasing number of businesses that take us as their international operating system. And that is definitely on the rise. So people and businesses are not getting not hunkering down and focusing on their domestic markets. They're going international.
Okay, so the stock is up today, obviously healthily, but you're still down from the list price when you listed in the UK. Any regrets on listing in the UK? Is the UK still a good place to do business?
Actually, we listed, remember, as a direct listing.
Okay.
So we didn't set the list price. It was set in the auction. So we didn't really control the process, and that was fun. It was one of the first direct listings in the UK.
Do you regret not listing on NASDAQ?
Not really. We deliberated a lot at the time, but our international shareholder base is very international, as are our customers, and it hasn't changed. We still have a lot of American funds holding our stock and more buying up. So it doesn't matter for them if we're based in London. Or
does it not matter? Because you see some other businesses that are London listed contemplating dual listings over in the United States, for example, or even moving primary listings, and some of that coming from pressure from shareholders. You don't get any of that pressure then?
I think there is work to be done in the UK, modernizing the regime a little bit, and I know the stock exchange is working on this. So I think this is just gonna happen and catch up a little bit with where the US already is.
There's change at the top, at least temporary change at Wise. So your CFO is going to be stepping down in March of next year, I believe. You're also taking some time out. How do you reinsure when these lines came out, when the news dropped, there was a bit of a move down in the stock on the back of these announcements. How do you reassure investors around what some are seeing as kind of churn at the top?
Well, I'm coming back in December, yes. And we have actually a policy in the company that everyone gets to take a 6-week sabbatical after the 4 years in the company, because we're working really hard, and you've got to take a bit of time off to kind of recharge. So I'm taking this now. I've missed all my previous opportunities. So 12 years in, it's my first sabbatical. But our leadership team is really strong. So they've been with me, most of them, for more than 6-7 years. Our CTO, Harsh, has taken over as an interim CEO. He's been with me for 8 years. So we have a really tight team, and we're not really concerned of me taking some time off. And you know, we wish we didn't have to find a substitution for the CFO, but we will do that as well.
On another subject, we talked about the regulatory regime in London and catching up on some fronts you suggested. In terms of crypto regulation, I know you say on your website says you don't accept crypto in certain situations, but the SEC getting more hostile, it's obviously a big talking point in sort of financial technology and fintech circles. Your thoughts on what's happening in that particular space?
We've been kind of slightly distant from the crypto debate. We believe that the problems we're solving of making money move globally can totally be solved with national currencies, fiat currencies, and it's better solved this way, actually. So we don't really follow that debate. I'm probably not the best person to have an opinion.
Okay.
Just very briefly before we let you go, how are you thinking about AI and building that into the business?
I think this is going to change a lot. It's going to change a lot in how we operate, how we build products and features. Okay. I think it's a good thing that we'll all benefit from.
Okay, Chris, I really appreciate your time. The stock is up 19% as we speak on Wise, on the upgrade to their forecast in terms of earnings for the year. Wise CEO Christo Carmen there. Coming up, BOE expectations drive sterling calls higher. We're going to take a look at cable and other FX pairings. That is next. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000, 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
The markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Markets Today. We are 53 minutes into the trading day here in Europe, and you can see the European stocks are a little firmer. Nasdaq futures up by 0.4%. Let's talk about what's happening in markets. Ven Ram joins us from our Markets Live team. Very nice to have you with us to round out the hour, Ven. And you're focused on FX this morning. The pound is your highest conviction call for the year. Risk on was lifting the pound and the euro a little earlier. How are you viewing the pound call now?
Well, the pound still remains very much my high conviction call. We called the pound higher at the start of the year, and it's worked out well. It surged more than 5% since then. I do think that it still has plenty of upside because the BOE is a long trek ahead of it, which will push inflation-adjusted rates sharply in favor of sterling. I do think that the pound is on track very much to access 130 later in the year. Even higher levels are possible, but it will come down to what the Fed does on the other side of the equation. If the Fed were to stop becoming surrounding a recession, they really need to make a unit of number. And that will add another time for upside to continue over the next 6 months. But beyond what happens in the second half of 2024, the call for later. At the moment, the pound's upside is still intact. And, we've had a lot of doom-mongering about the UK economy in the past year. Hasn't really worked out. The labor market is extremely sticky and tight, and that will keep the UK economy going. And I do think that the people are underestimating the strength and resilience of the UK economy.
Okay, then round from our Markets Live team. Thank you on the call for further upside for the pound. You can get up-to-date analysis and insight, of course, from Ben and the rest of the team. Just go to M-Line, go on your terminal. A couple of stocks on the move for us, Anna. We're talking about Naspers and Process and the change in terms of the cross-holding there, and you were debating as to whether or not that was more about what was coming through in terms of China, the upside that we see for Tencent, which ended up about 3%. But there's Process gaining 9%. Naspers, of course, in similar territory. BT. Group, it's a different story, though.
Yeah, BT Group have got a downgrade there, cut to sell at medium. Yes, with a price target of 120. It's at 122 right now, so that weighs there. And JD Sports also focus. That stock down by just over 5%. One of the worst
안녕하신가요? 신성한 천상계 마족들이 있을 것은 없다! 마족들의 기세가 만만치 않군. 타르크는 내가 붙잡아두겠다. 신성병기 크루세이더를 가동해라.